Are you scared to pull up your credit score because you don't know what that number is going to be? Do you want to buy a house, but you're wondering if your credit score is going to be high enough? Did you know that your credit score can affect your mortgage interest rate? Well, if you've asked yourself any of these questions, then this is the video for you, so stick around. Hey everyone, this is Danae Hewitt, your go-to DFW realtor with Brico Realty Services. I've been helping people buy and sell houses for over 2 years here in DFW, and I love what I do. On this channel, I give you lots of tips and advice, and I hope to answer any questions you may have. So if you haven't done so already, hit the subscribe button and leave me a comment below. I'd be happy to help you out. All right, so let's talk about your credit score. I know it may be a scary thing that you might want to avoid and kind of brush under the rug. You know, maybe for some people it's like stepping on the scale, like you don't want to know what that number is, but it is so important to know that number, especially when you plan to buy a house. I do like to stay in my own lane of buying and selling real estate, negotiating contracts, negotiating terms, all of that stuff. But I do get asked questions from my clients about their credit score and how it can affect them from buying a house. So I do need to know some information about how your credit score can affect your mortgage loan. Some things I get asked are, which credit score is the mortgage lender going to use? If you didn't know already, there are 3 credit bureaus that determine your credit score. They are TransUnion, Experian, and Equifax. All 3 of those bureaus give you a credit score based on slightly different criteria to see how credit worthy you are. And your mortgage lender is going to take all 3 scores. They're going to pull all 3. And what they're going to do is they're going to take the median score, the middle score. So let's say, for example, one credit bureau gives you a 660, the other is 670, and the other is 680. Well, your mortgage lender is going to take that score of the 670 and base your interest rate off of that number. Let's say you are applying for a loan with a spouse or a partner. They're going to pull both of your credit scores from all 3 bureaus. They're going to take the median of your score and the median of your partner's score, and they're going to take the lower of those 2, and that is the credit score that they are going to base your interest rate off of. Have you heard of the higher the credit score, the lower the interest rate? Well, that is absolutely the truth. Right now, we're in January of 2021 as I'm filming this video. If your credit score is around 620 to about 639, your interest rate is gonna be around 3.9% on a 30-year loan. Now, you definitely can't quote me on this. There are other factors that determine your interest rate, but that is a rough guideline right there based on that credit score. If your credit score is much higher, like a 760, then that interest rate can be a 2.3%. Again, rough numbers for where we are right now. You might be thinking, okay, so my score around a 620, my interest rate is 3.9. If my score was a 760, my interest rate is 2.3. Okay, it's a 1.6% difference, not a big deal. Well, let's break that down in numbers financially for you. That difference, that 1.6% difference, could be an extra $260 that you are paying every single month. Over a year, that's $3,120. And over the life of a 30-year mortgage, that's about $93,000. So having a higher credit score means more money in your pocket on a monthly basis. So you want to do everything you can to make sure that score is as high as possible. I've also had people ask me, well, hey, this is what my credit score is. It's about a 700. How much of a house can I get for that? And you really can't answer that question without getting more information from you. Like, how much do you have for a down payment? How much do you make every single month? And how much debt do you have? So how much you make every single month and how much debt you have is called your debt to income ratio, or your DTI. The ideal rate to get pre-approved for a home loan is to have your DTI at 36% or lower. If it's higher, you may need more of a down payment, which means you'll have a higher interest rate, or if it's higher than that, you may get denied a home loan altogether. Your mortgage lender is going to look at your debt to income ratio and see how well you're handling and paying off your debt based on how much income you have. They also use this number to predict if you financially can take on more debt. You really want to make sure that your debt to income ratio is right around that 36%. So if it's not, then here's some things that you can do. First of all, don't take out any more credit. Don't go buy furniture on credit. Don't buy a car. Don't do anything to tack on more debt. And do the best that you can to pay off some of your debt while you're looking at buying a house. If you know that you want to buy a house in the next 6 months or a year, it's a really good idea to check your score now to see where it is. And if it's not where you want it to be, then that's good because you've got 6 months or a year to help get it up to where it needs to be to get you that lower interest rate a year from now. So don't worry, don't fret. Things happen with people's credit score, and just know that you're not the only one that may have a lower score right now. It happens. The good thing is that you're being proactive and looking at your score to know exactly where it is when you go to get approved for a home loan. If you look at your score and you realize, yikes, it's a little low, but I don't know exactly what to do, there are so many credit repair companies out there that are happy to help you out. If you need any of those, let me know. I'd be happy to send one your way. And if you also need a mortgage lender to talk to because you're thinking about buying a house soon, I definitely have a great group of lenders that I work with that'll be happy to help you out. I hope this video gave you a ton of information, and if you have reached the end of this video and you have not subscribed to my channel, what are you doing? Y'all need to subscribe, hit the like button, and let me know in the comments below how I've helped you out today. Have a great one. We'll see you next Wednesday.